Ghana's headline inflation jumped to 27.6% in the month of May, hitting a new 18-year high. And I have Chuka Nwachukwu, head of bonds trading at UBA. He joins me now to review activities in the West African fixed income market. Thank you so much for your time today, Chuka. Looking at that number here, the number here, 27.6% for the month of May, talking about inflation numbers here. We see this Ghana, the central bank of the Bank of Ghana already initiating 2 rate hikes already in the month of March and even May to try to stem inflation, but we still see this monster continue to rise up here. For you, what's your take on what's seen play out?
Okay, thank you, Ken. Like you said, the inflation figure came out recently. We saw about 400 basis point movement from 23.6 to 27.6. That's quite significant. Also, like you mentioned, this is about 18-year high. You know, if you look at Ghana economy, you see that the economy is not doing too badly. Ghana's Euro bond, for example, is very attractive. The 2025 Ghana bond moved from about 12.8% sometime in February to well over 20% last month, and then it's currently trading around 19%. So, but for the inflation figure, like you said, we see that the inflation figure has actually been moving up. This is also has to do with the war in Ukraine and then high food price as well as high cost of gas.
But for investors looking to Ghana's debt instruments right now, what sort of approach would you advise that they take going to address the market here?
Yeah, I think the only thing that investors should just caution themselves about is the downgrade. But then Ghana government has been prudent, and they've actually been managing investment into that flow, that section of the economy pretty well. So, like I said earlier, Ghana Euro bond, for example, the 25 is still attractive. I will advise that investors should be cautious, not going too heavily while they watch how the thing turns out. And then don't forget, I mean, Ghana has over about 9.5 billion in foreign reserve. Then they also have different sectors of the economy that can fetch them foreign FX inflow. Apart from oil, they also have cocoa and gold. So by and large, the economy isn't doing too badly.
Now let's mirror that here in Nigeria and see what we're playing here. We saw inflation figures for Nigeria as well. Also took a spike the last reading, and we're expecting the new figures to come out shortly. What can we expect, or how are you reading the market on what we can expect for Nigeria?
Okay, well, our inflation figure it came out the last time at 16.92 from 15.82. That's about 90 basis points. Government had actually reacted to it through the CBN. We saw a rate hike of about 150 basis points from 11.5 to 13%. And so government is actually reacting to the inflation figures that keep going up. As long as the oil price and the war in Ukraine still continues, I expect that the next inflation figure will be slightly higher than this. You know, of course, due to high costs in food and then petroleum product as well.
Now, let's come to sentiments we're seeing play out in our markets today. Yes, we'll talk about that primary market auction today. What are we seeing play out?
Okay, yeah, so we have about 167 billion on offer at the NTB auction today. So we expect to see rates up. We expect to see upward movement in rate. The last time the longer end came out above 6%. You know, and this is in reaction to the movement in the MPR from central bank. And so within the next couple of hours, we expect that the auction result will be out, and then we expect a slight movement between around 7% to 7.1, 7.15.
We saw the debt management office come out with total debt stock already coming at 41.6 trillion right now for the first quarter. How is the market interpreting that figure?
The market is actually has priced that in because we know that government will continue to borrow. There was a news some days back about a cancellation of the Eurobond from the government. So we expect that government will come into the local market. And so that's why we've seen there's this anticipation of upward movement in yield, especially on the bond side. So the market, actually is carefully looking at this, and then the market has actually interpreted some of this also, pricing the yield movement, and we've seen we've seen activities, especially on the T-bill side, on the shorter end. We've seen activities on the July, August, and September bills, and so all these have actually been pricing, taking into consideration the high high debt from the government.